Welcome everyone to season 2 of Investing with the Boys. We are back, powered by Futurum Equities. Here we got your boy Logical Thesis. We got Stock Savvy Shy, also known as Shy. I don't know, maybe that's Shy. Who knows? And
the Shy.
And the third host, Sam Solid, Sam Badawi. How are you guys doing? We have a lot to catch up on. The last time we had one of these episodes was months ago during the Tariff Tantrum. And now we're here back at all-time highs again, every single day, all-time high. We had big earnings this week. We're going to do a little bit of recap what we have so far. We had FOMC report, of course, unchanged rates, but a lot under the radar there. Lots to talk about, guys. Let's kick it off. How's it going, Shai?
It's going well. I mean, when was what was the date of our last episode when season 1 ended? Was it is March, I think? It's kind of crazy. It feels like a year ago, but yeah, it's only been a couple months. That's what's like in a Trump presidency. Things are just up and down, but it's been great. I think we can all agree our portfolios are an all-time high, which is always a great sign. And I think that's in the past couple months, I mean, I started a new role. I made it across the walls. I'm on the street. I'm on the institution side. I work at Futurum Equities with a great team, and Dano Newman as a partner, learning a lot from him and the people we interact with. Like just last week alone, I was in the ServiceNow and IBM room, and that's something I would not think I would say a couple months ago. And other than that, yeah, things are really looking great in the market. I feel like we keep having gut punches and we keep coming out stronger. And that's something that proves the durability of this bull market, where if it was flimsy, like I think that we probably would maintain a bear market, maybe test multi-year lows, but we didn't. We V-shaped. Why is that? AI is still the main event, and it's going to continue to do so. There's going to be a high floor in any kind of pullback. There's going to be a V-shaped recovery type of behavior, because knowing that we're in the earlier side than the later side of this AI theme, things are going to be okay, just because we're in that AI infrastructure spend that's going to be touching so many different sectors. And whether Powell admits it or not, we just came off from his FOMC meeting where he was just teetering on like dovish. Are they going to cut rates, increase rates? Like he's playing it right down the middle. I don't think it matters, because we are doesn't matter if the Fed is going to cut rates. The market's moving ahead of it, knowing it's coming regardless. So I think that we're in a good spot, and now we have some seasonality weakness. But I want to pass it to Sako, because logical, because I think he is probably I want to speak for Sam, but I think he's 2xing my performance this year. I don't know if he's 2xing yours, Sam, but he is killing it. Triple digits, right? You're over 100% year to date.
Me, man.
Yeah, man. I just hit a new all-time high today. Feeling pretty good off the back of a couple really big earnings. I've been sizing my positions really well. I've been, basically digging deep into that conviction and, finding the names that I feel are mispriced right now. And so, yeah, it's been a great run. I think we got a very big opportunity with the tariff sell-off. If you remember on the show months ago, we talked about how, look, if the economy is really going to go into some tariff-induced recession, then we're going to see a lot of these names in ad tech, et cetera, get hit the hardest, which they did. But if it turns out that the recession is really not going to happen, then those are potentially going to be some of the biggest winners in the market. And that's exactly what we've seen. I've talked about Magnite a lot on this show. That's been a huge winner for me. I still look forward to a couple other names in the space like PubMatic. We had that huge Google news, which I had discussed in the past. I still think that is yet to be priced into some of these stocks. But today I had Lending Club is a name that I've talked about for a long time. And a lot of these positions I'm sitting in with a good amount of calls to add leverage to my exposure. Teradyne, which seemed like a kind of a dying giant, up 20% today on earnings. That one also in calls, given the low IV, it just made sense to position to trade that way. And the stock was getting constantly downgraded. Meanwhile, there was a lot of research out saying that they were the supplier for Amazon's robotics. And I think today we got some of that hints on the earnings call, and the stock went from plus 5% to plus 20%. So I think there's a lot of sleepers in this market. And while the market's pushing all-time highs, really we're just only a few percent above what we were at the pre-tariff tantrum days. So the market's not as stretched as people want to believe. They're anchoring to the lows, but if we didn't have the tariffs, then we wouldn't really, if we didn't have the tariffs and we didn't have the fall off, then we wouldn't be up so much. So I think people are just price anchoring to those lows rather than maybe price anchoring to before the sell off. And so I think that this market still has legs. I think that we've seen that breadth hasn't truly participated. And I'm looking forward to the breadth expansion. I'm looking for, there's a lot of opportunities that we look at. And, we just got some numbers from Microsoft Meta. You guys were mentioning they're up a lot after hours on really good earnings, which is fantastic for this market to chug along. Obviously, the core there is, AI, compute, etc., which is fantastic. Shai mentioned, that's what's, really driving this bull run. That's fantastic stuff. And, it's going to continue to fuel this market. That said, there's still a lot of froth in this market, and we're still kind of getting through some of these momentum names, some of them losing momentum in the last couple of weeks. And so it would be nice to see some of these more fundamental stories play out. There's still a lot of good relative valuations out there in the market, and that's where I'm focused. I have my fundamental hat on. I do put some credence to technicals, a good amount. But right now I'm in my bottom fishing phase, and I'm telling you, there's a lot of bottom fishing. I know we'll get into software at some point, but there's some mid-cap software trading for real cheap. We've talked about it. Sam and I, are aligned on GitLab and a couple others. So, we had that big news with Palo Alto Networks acquiring Cyber. There's names like OKTA out there still trading for really cheap. And so, what's going to happen when some of these mid-cap software names start to re-rate closer to what I believe should be fair valuation? There's a lot of opportunity in this market. Anyways, I've talked a lot. Let me pass to Sam. Let us know what you've been up to, man.
For me, I think all three of us were just dumping loads of cash on the market in April. That was quite an opportunity, getting a lot of names, a lot of companies at, I wouldn't say very compressed valuations, but some of them were pretty low in terms of their median and average valuations. When we think about companies that were obviously set up for the AI narrative, they were one of the first ones to recover. One of them was Palantir, of course, hit all-time highs probably a month and a half before the entire market did. On top of that, you also had Meta basically leading the race for the Mag 7, in addition to Netflix, and of course, NVIDIA leading the wave. And then you had a lot of late bloomers come in there and just start to outperform as they had been laggers months before that. You had AMD now getting close. I think it's above 180, probably 190 after hours with the massive cloud growth and probably heightened CapEx spend for a lot of these mega cap companies, for Microsoft, for Meta. And we're recording this Wednesday. So on Thursday, we'd be getting numbers for Amazon to see what's happening with that. Google did raise their CapEx by $10 billion last week on their earnings, and that was great to see. And a lot of these data center companies have really led the wave, the upward wave in the market momentum, and they will continue to do so, in my opinion, as data center expansion continues to re-accelerate. And on top of that, you also have the chip restriction or chip export restriction being lifted. Now NVIDIA can sell the H20 chips, which is basically an under or downclocked version of the B200s and H200s. And then you also have AMD. They could continue selling the MI308 series chips to China as well. So you also have all of these large hyperscalers in China, which has the second largest number of aggregated number of gigawatt data centers in the entire world. Of course, the US is number one, and then you also have Europe as well. But when you think about the amount of spend that's really going toward bringing compute as close to the consumer as possible, you also have other plays as well that are hitting all-time highs, which I know Shai's a big fan of it as well. Cloudflare, it was always known as the DNS protector, grabbing about 20% of all the DNS traffic around the entire world, and up to, I think it was about like 80% of the traffic does go through Cloudflare, but able to bring that compute closer to the clients and consumers using their edge computing. But now they're also tapping into a cybersecurity TAM as well. That is, I think now their TAM probably was like a threefold after they started announcing that a couple of years back. And it's sitting at basically near all-time highs, not all-time highs back from 2021, but at least 52-week highs day after day. Valuations, I think we all can kind of agree they're getting a little stretched at this point. But at the same time, you have GDP basically printing 3%, bouncing back from the contracting GDP of like, what was it, like the minus 0.01 or something percent last quarter. And then on top of that, you also have the AI disinflation backdrop as well. As you continue to push out this more efficient technology, and as you continue to cut the headcount in workers, you reduce the OPEX, you reduce the CapEx, and the long term for these companies, but they're bringing all of that forward today. It's just showing the positive momentum in terms of how the country is going to perform, bringing jobs onshore, bringing a lot of manufacturing onshore. That's just going to be the upper momentum for the entire economy, which helps the whole theme of paying down the debt. At the beginning of the year and during Trump's nomination or during Trump's running, he was going for, hey, let's cut the government spending and pay down our debt and increase tariffs. But then now that narrative has switched from paying down the debt to outgrowing the pace of the debt. And he is full force on this, saving, what was it, like $800 billion of taxes, $800 billion of debt if we do decrease the rates by about 2%. If we continue these figures, we're going to continue this Goldilocks state. And I could see the market just continuing to push all-time highs for a prolonged period of time.
Yeah. So, I mean, Sam mentioned Cloudflare. That's a name that we've been talking about for a long time. And it's also been a kind of polarizing name because it's never been cheap. It's been very expensive. And this is like one of the instances where my philosophy as the Mac investor, caring all about moat, has played out, where you guys hear me talking about the AI tsunami coming all the time, and it's coming for everyone, but it's especially coming for a lot of software companies. Cloudflare is, I wouldn't classify them as a software company. Like what Sam was mentioning, this was a CDN. Now it's essentially building, it's becoming the gatekeeper of the modern internet. So I'll get back to why that is in a little, but they always had this monopoly where 20% of the internet essentially runs through their own network. Like 20% of all websites that are used globally, think about that, runs through them. That's something that protects them as a lifeboat from that AI tsunami. That combined with a founder-led CEO who I believe is one of the best out there when you're thinking about wartime CEOs, when you think about Karp, Musk, Zuck, you have to think about Prince at Cloudflare. And knowing that he can probably leverage the monopoly that they have in that internet presence as that CDN network to become that gatekeeper of the new modern internet. Because guess what, guys? AI is changing everything for the whole world. It's going to change the internet. You're going to see browsers essentially become the distribution of all these LLM models. You're already seeing firsthand right now with OpenAI what they're doing. And that's also why people are throwing a lot of FUD on Google, is because the browser is going to change, and that's going to affect Google search. We'll talk about Google probably another episode, because right now we are just talking about the latest and greatest. And I think we got to talk about Cloudflare's latest product release that validates everything I'm saying right now, where it was the crawler platform. Correct me if I'm wrong, Sam, if I'm misusing it, but I think it's this couple weeks ago, they announced a pay-per-crawl feature, or like a metering product, where I think is a perfect example of how they're going to position themselves in the new digital economy, where if you're not unaware about this, LLMs are going to be scraping and summarizing the internet, and that's what feeds into all these model qualities. Spoiler alert, we don't want that. A lot of companies don't want that. So how do they protect themselves from that? Via the Cloudflare crawler. And essentially what this means is whenever these LLMs try to scrape the information from the internet, the internet's going to send them a bill, aka Cloudflare. And they're not going to be waiting for permission from all these bigger players like the OpenAIs, Anthropics, Googles to do that, because what do they have? Their own network. And how much of that own network's being used in the world? 20%. That right there is a great example on why Cloudflare is leveraging their monopoly in order to capitalize on this AI wave. And it's something that I think it's going to allow them to compound at a 30% clip for a very long time. It looks very expensive right now, but if you think about enterprise value as a whole, it's 70. What's their market cap right now? Their market cap is around 70 billion. That's still like, that's kind of pricey. It's at 30 times sales. Hey, what's Anthropic's valuation? Oh, it's 170.
Yeah, it's over 100. Yeah.
See, like I think there's a weird environment where valuations taking a backseat, it's because a lot of these private companies are getting ridiculous valuations, but it's because they're proving themselves that they're going to belong in this new digital economy where nobody knows the ceiling on AI. It's going to be one of those themes that is going to have an indefinite demand. And because of that, nobody knows what the ceiling is going to be. And it could just be a ridiculous amount of money that's going to be made. And I think that if you're proving that you're going to belong and thrive at $70 billion with a $10 trillion TAM assigned to AI, it's pennies. And I think that that's why it's showing a lot of relative strength. And I think that's a classic example. I wanted to bring that up because of when you have a monopoly and there's a super cycle going on, you can leverage your monopoly to catch the latest tide. And another good example, actually, I went over it a lot. Curious on what you think about that, Sam, on the Cloudflare piece.
Yeah, it was actually pretty interesting because I agree with you. Matt Prince, CEO of Cloudflare, is one of the greatest CEOs alive. I really put him up there with a lot of other great CEOs like Frank Sluman, Bill McDermott, and obviously we have. I think another great CEO is probably going to end up being Sridhar Ramaswamy, with just how he's able to turn the ship around with Snowflake. But a lot of good software companies out there have really good CEOs, and they're very, I wouldn't say underappreciated when you look at the valuation of the company. You had an all-star CEO like Alex Karp. Basically, he knows how to market the company as well, but he knows how to land very big contracts with very recurring revenue, and that includes governmental revenue. And they also know how to attack the private side as well. Like, they know how to really represent their company, make the company very relevant. But also you also have Vlad Tenov from Robinhood as well. Amazing CEOs. And I feel like these companies need to have these really good CEOs that can be the face of the company. And they're usually founder-led too. If you guys probably have noticed too, like usually the really good CEOs tend to be founder-led. And the companies that are really good usually are founder-led. Also, if you think about CrowdStrike as well, you have the CEO there, founder and chief executive officer of the company and director of the board, leading the company the general direction that he wanted. And we were talking about also earlier, Logical brought it up with Nikesh Arora, who's the CEO of Palo Alto, recently announced that they're having a $25 billion acquisition of CyberArk. And a lot of people didn't really know what CyberArk was before this acquisition happened, but that's another sector of cybersecurity in privileged access management, mostly with identity lockdown and protecting your credentials and certificates, whatever it is. This is all becoming very important in this entire AI wave. And when we think about the AI wave, it's not just about data center and compute. It's not just about software with data as well. It's about protecting that data at all costs. Because with the amount of data that gets scraped on the World Wide Web, who knows? Honestly, I'm just going to assume that my information is already out there. But I don't have information that's tied to myself that costs billions and maybe even trillions of dollars. But these large enterprises do. They need the best of breed protecting all of their data. And that was a narrative that wasn't appreciated as much, I would say, in 2023 and beginning of 2024. And now it really is getting that appreciation. Even though Cloudflare only did guide for about $4 billion this fiscal year, trading at about, what is that, like 19, 20 times their valuation in a forward NTM basis. I think it's rightfully so to have that kind of valuation. My only thing is this valuation going to expand? Is my return on equity going to be in the positive direction for some time? Well, you know what? I think that as long as the market stays bullish, companies like this with leaders and with wide moats in their own industries, expanding their TAM as this era unfolds itself, I think that it'll probably continue expanding as long as we stay in this bullish market, because leaders tend to lead the whole way and laggards tend to continue lagging unless there's some sort of narrative shift in terms of their inflection when it comes to their technology or their financials. And we've seen that happen, but the tide does raise a lot of boats. When we think about CyberArk basically getting acquired and being a sector that's looked at for cybersecurity, that puts into question as well with OKTA, which is something that Logical, I know he's bullish on, with a compressed valuation. Could this be a turnaround story for them as well? We've seen it happen many times with a lot of companies, especially in the data sector. It's probably going to happen in cybersecurity as well. What are your thoughts about that, Logical?
Look, I am a data scientist by trade. So I have studied, computational mathematics, machine learning models, all that kind of stuff So I'm very well versed in the technology that we're talking about that's sweeping the world right now. And I can say pretty confidently that I think most people who are bearish on AI don't truly comprehend what's going on, don't understand the level at which it's being implemented today, the speed at which it's being implemented. Like the most cutting edge technology that's being released is immediately being implemented because we already have that infrastructure today. So while people constantly say, "Oh, this is just like fiber or whatever in 2000.com," it's like, dude, Amazon IPO'd in 2020, or sorry, 20, in 2000 or 1999. But I didn't order my first package until 2012, right? So 13 years after the IPO. Today, you're getting ChatGPT or Anthropic, and obviously the private equity market is popping more than the public equity markets in terms of some of these up and coming companies. But all of those companies, their LLMs are being implemented today, immediately. And so those are seeing efficiency gains at the corporate level at all of these large companies. And that's leading to efficiency gains. It's going to lead to, sadly, headcount reduction. And that's going to basically flow right through to companies' bottom lines. And it's also going to increase revenues because you're able to develop products at a faster speed and get them to market quicker. So all of a sudden, you're able to offer better products quicker, which means that you can probably increase your pricing. You can outpace that inflation. So you're getting top line growth. You're getting operating expense reduction. That's a huge margin expansion opportunity. And so that also extends the runway of a lot of these companies. So I think, I've been posing this question to myself and, to my followers of like, one, people keep trying to say this is 2000. What if it's 1998? What if it's 1996? What if it's 1994? Tough to say. And I would argue that we're not really at crazy bubbly valuations. Sure, there are pockets of froth. Agree to all. I'm not a big fan of like pre-revenue companies and some of these sectors. Fine. But a lot of the companies that are leading AI are real businesses. They're making real impacts in other businesses today, like the Microsofts, the Metas, the Amazons, etc. The clouds, these LLM companies. That's all reaching efficiencies today. So forget about if it's 1998, 96, whatever. I would still say that right now we're not in the realm of bubbly valuations whatsoever. The runways of these revenues and growth is getting extended, and the profits as well. So now I got to ask myself, we develop technology today and implement it way faster than we did in the past. What happens if the fundamentals outpace this bubble, right? And so that's kind of what I'm thinking about is like, what if we never bubble? Because it just ends up being, we just keep implementing and outpacing, and then new things come out and AI agents. And, I think the one thing is probably like, that's a realistic fear on a societal level is, what happens if we have too much headcount workforce reduction, right? And so that's for sure something that's a little troubling. But yeah, I think people underestimate the impact that AI is making today. Maybe some of these applications are still not profitable or whatever, but I can tell you from a workflow standpoint, at many corporate jobs, it's speeding up the work that's going on. You're able to develop something that used to take 2 weeks in 2 days. What else? I'm reading reports that first to third year law students or law associates are, not needed as much because basically you can get better reports from a ChatGPT like LLM than you would get from a first year associate in a week, right? You can do that in an hour basically. So I think we talked about this on actually like probably one of our first episodes, Shai, where we talked about how like workforce reduces. You go from 5 engineers to 2, but all of a sudden compute just goes to the moon. And you're getting like, queries are doubling and tripling, etc. So I know you got some comments on that. Go for it, bro.
Well, no, I think first off, we're so early. I think a lot of people realize there's multiple generations that they don't even use AI still. They don't realize they don't use ChatGPT, but let's ignore that. That's the easy low-hanging fruit. Let's talk specifics. Literally just 30 minutes ago, Azure numbers at 39% year-over-year growth. That's mind-boggling at that scale. Let's talk about how much cloud revenue is actually generating this past quarter. $4.3 billion alone this past quarter. That's more than 2x the previous record that Azure's ever done in its company history. I think this is the moment where AI is going to start being reflected in an aggressive pace for all these first stage winners. And it's going to result in a productivity boom like we've never seen before. Logical's a data scientist. I'm sure now with AI, he's able to do 5x the amount of stuff he used to be able to before. And now for his employer, there's a better ROI now for Logical. Keeping him on, not just because he's got a charming smile, he's a genius, but he can actually do a lot more with that one seat count.
I mean, even things. Sorry, just to even
continue.
Yeah, I mean, like there are things that maybe I'm not like the best power user of a specific software, like let's say Tableau or something like that, and I need to make some pretty complicated charts in terms of like these data visualizations for upper level management to like kind of monitor metrics, etc. I can like develop these dashboards on the fly without being an expert myself, but just being competent enough to be like, hey, how do I do this? What's the best way to do this? And the solutions it comes up with are so elegant and so quick and efficient, and it's like, wow, that probably would have taken me days without these tools, just because like how would I do that? That's so complicated. And it's like, oh, easy, like this. And sorry, go on.
It removes the trial and error, and that takes the lump sum of a lot of these kind of data analysis.
And not even that, but like, let's even take it further. Like nowadays, I mean, why would you even write code yourself? Like, it's so ridiculous. And obviously there's companies like Cursor that literally do a lot of the code writing for you, which if you have the tools, like we're past the point. It's almost like, think about like, I was thinking about it like, oh, well, what happens to kids now who never learn coding and blah, blah, blah. And I was like, well, dude, I don't know how electricity works, but I still use my lights at my house. Right. So like, I don't need to know how everything works. I mean, I think to a certain extent, it's good to know, but you don't really need to anymore if these tools exist. So if I need to like run a machine, like I have a data set and I need to run a machine learning model to determine like, hey, I can just ask basically, hey, write me some Python script that will, read in this data, clean it for me, try out, do some k-fold cross-validation for several different classification models, compare the results of all these different models, pick me the best one, spit out the AUC curve, all that.
Let me pause you there. Do you use Mosaic and Databricks?
I don't think I've used that yet. We use a lot of.
So do you use Cortex and Snowflake then, or what's your usual like?
I use Databricks nowadays. I've used Snowflakes in the past, but I don't know.
Okay,
maybe I'm just not familiar with the words. I'm not on the data engineering side. But then again, I don't know. Let me look it up.
Oh yeah, no worries. I mean, but
yeah, I also agree with that. I think there's going to be a lot of a contraction when we think about headcount in multiple companies. We already saw a lot of the mega cap companies, including Microsoft, came out and said 40% of their code is really generated by AI, which I think it was like $500 billion they were able to save in terms of headcount and operating efficiency just by that benefit. And this is like second year, maybe if you want to say year 3 of ChatGPT. This is going to last for a long time. If you think about the massive S curve that people have been talking about with AI hype and so on, Gartner's AI hype cycle, they expected it to be a huge hype into a run up and then kind of fall off a little bit there. But the actual realization of the technology is going to get better as it increases over time. I think it's actually a little bit different. I think that we are going to see that boom very quickly. And I think we're going to continue seeing it on an exponential level. When we think about how computers, if you release back then when processing power was actually very important in terms of clocking speed, you had CPUs that were like 2.0 gigahertz, and then you had like 2.5, 3.0, and whatever. At a certain point, they stopped talking about it because it was no longer relevant to say the clocking speed. This is actually something that Sam Altman was saying in a recent interview that he had, was that it's no longer relevant anymore. And at a certain point, hard disk usage was important. At a certain point, memory size was important. And now it's come to the point where it's no longer about that. It's no longer constraint on the actual compute. It's more of a constraint on the energy and the power that we're able to get to power all of these new systems that are going to be running basically at 100% capacity until we come out with the newer generation. And that newer line of compute that gets invented and created every single year is going to be twice as good as the previous year. Not linear, exponential. We can think of the same thing with the stock market in that perspective. People thought valuations were egregious when they were trading at 5 or 10 times sales. Now today we're seeing Palantir at 100 times. Not saying that that's the norm or anything, but as long as we continue staying in a bull market, this can continue. this can continue on an exponential basis. And think about the amount of money that's being printed around the world as far as possibly making cryptocurrency the stable coin of the entire world. If that happens, it's no longer about how much money you're printing. It's just about the expansion of valuation that people are pumping up these coins to the point where we no longer have to worry about dollars anymore. It's more about whatever stable coin that we're using around the entire world, whether that's Tether, whether that's USDC or so on. I don't want to read the future, speculate into that, but there's a reason why the world is changing this quickly and at an exponential basis versus a linear basis, because as a society as a whole, technology just gets that much better every single year. I mean, I know you guys got a lot to say about that, but I think that wraps up great for our first episode of season 2. We're definitely gonna have many more installments of this. We're in the midst of earnings season right now. There's going to be a lot more ahead. Still, at the time we're recording this episode, Amazon and Apple are going to be reporting tomorrow at the market close. That's an additional $6 trillion of market cap being reported. I mean, who knows? Maybe at this point, I think Microsoft's going to be head to head with NVIDIA in terms of market cap. NVIDIA is probably still ahead, even though we got that 10% or was it like 7% increase on the Microsoft market cap. I mean, hey, what if Apple is up about 10% after hours? That might come pretty close, right? So it's going to be a very exciting week. Lots of new information to go through. I know for myself and I know for you guys, earnings season is just a really busy season, but it was great bringing this back to you guys with the boys. We got Logical, we have Shy and myself, Sam. Great to see you all guys and see you guys in the next one.